Hi guys, and welcome to another week ahead video. Now this week we're going to focus on the Kiwi dollar with the upcoming RBNZ meeting as well as 2-year inflation expectations data. So let's jump to the video and see exactly how we can prepare for this event and possibly trade it as well. Okay guys, so we'll start with our normal 3-step analysis process. Step 1, find the baseline for the relevant currency. Step 2, find the baseline for the upcoming risk event. And then step 3, looking for possible sentiment shifts that can cause a catalyst to trade the currency. So then looking at the baseline for the Kiwi dollar, the short-term bias for the Kiwi dollar has definitely shifted to the downside this week. This happened following the Q3 employment numbers released for New Zealand. We saw that both the job growth as well as the unemployment rate came in well below the market's expectations. And the probability for a November rate cut by the RBNZ in the run-up to that event was about 54% prior to that employment numbers, and that rose to above 65% after the release. Now currently, according to a Reuters poll, the expectations for November rate cut is at 78%. At the time of doing this recording. Now, in terms of key data, we did see GDP disappoint in quarter 3 with a rise of just 0.3% versus RBNZ forecast of 0.6%. However, we did have inflation surprise to the upside again with a fall to 1.5% in Q3, whilst the RBNZ was expecting a drop to 1.3%. Now, the overall bearish view in the Kiwi dollar was further expressed this week when we saw gains in the Kiwi dollar was capped. If we compare that to something like the Aussie dollar, following a couple of risk on sentiment trading sessions in the last week. Then looking at the baseline for the risk event. Now the main event for the week for the Kiwi dollar will be the RBNZ rate decision. However, the release of the 2-year inflation expectations the day before that will be a very, very important event to watch. The previous release of the 2-year inflation expectations came in well below the RBNZ's forecast, dropping from 2% to a low of 1.86%. Now, it's important to note that the RBNZ put a lot of emphasis on this release, and they also cited it as one of the main reasons for them cutting the OCR by 50 basis points when the markets were only expecting a 25 basis point cut. Thus, if this 2-year inflation expectations comes in below that 1.86% prior, we could see a very big reaction from this event, as the markets will then use that as and basically cement in their expectations for a rate cut by the RBNZ the next day. Now, it's important to note that Westpac Investment Bank, they have pushed out their rate cut expectations from November to February, and they explained that a miss in this data point in the 2-year inflation expectations will change their bias back to a rate cut at this week's meeting. Now, it is also important to remember that if this number sees a rebound and it improves drastically, this could potentially cause some analysts to opt for a hold rather than a cut by the RBNZ. And at the time of writing, the odds are in favor of a rate cut, with futures pricing placing the odds of a cut at 65% and the Reuters poll placing the odds at 78%. So then looking at possible sentiment shifts that can occur, in terms of dovish sentiment shifts, there are 2 possible dovish shifts that could transpire this week. The first would be from a big miss in the 2-year inflation expectations coming in well below its current 1.86% level. Now, the other biggest reaction in the Kiwi would be from another 50 basis point cut from the RBNZ, as the markets are currently only pricing in a 25 basis point cut. Now, the inflation numbers will be an important consideration in the case of the latter, as they were the reason for the previous 50 basis point cut as well. Then in terms of hawkish sentiment shifts, the biggest hawkish sentiment shift will occur if the RBNZ decides not to cut rates this week, as the majority of participants are expecting a cut. However, it will be important to gauge what the market's expectations are for the cut before the actual meeting takes place. For example, if the inflation numbers comes out much better than expected, then some participants might trim their expectations for a cut, which would make an on-hold position less expected. However, if the inflation data stays the same or comes in slightly lower, that would increase the market expectations for a cut. And if the RBNZ then decides to stay on hold, we would see a much bigger bullish reaction in the Kiwi dollar as a result of that. So the impossible currency pairs to consider to trade the Kiwi dollar. In the case of a dovish sentiment shift, we could look to pair the Kiwi dollar with the US dollar, which has remained well supported in the midst of the recent US-China trade developments, as well as a better than expected ISM non-manufacturing PMI number. And if we have a look at the hawkish sentiment, in the case of a hawkish sentiment in the Kiwi dollar, we could look to pair the Kiwi dollar with the euro, which remains fundamentally bearish given the current state of the European economy, as well as the dovish monetary policy stance for the ECB. Now, whether we get a clear dovish or hawkish sentiment shift, both these events will be valid for trading phase 1 trades if we do get a clear sentiment shift. Now, if you're interested to learn how this phase 1 trades work, you can check out our news trading strategy playlist on YouTube, where we post weekly examples of how these type of events play out. Now, if we do get a phase 1 move generated by a sentiment shift, we can also look for a possible phase 2 pullback from that initial move. Now, we post updates on these moves inside our tradable sentiment shifts reports inside the Forex Source terminal under the Market Insights tab, and you can see each day which sentiment shifts are in play and which ones are still valid for trading the phase 2 pullbacks. Now, you can also learn about how these setups work during our live analysis webinars each day inside the Forex Source terminal. Guys, as always, thank you so much for watching this video. We really appreciate you taking the time. If you found this content helpful, please do us a favor by clicking the like and the share button. Subscribe if you haven't done so already. And as always, please remember to put down any questions that you might have in the comment section below. We are making a bunch of awesome videos from the questions that you guys have asked us. So please keep them coming. And until the next video, guys, cheers.